on SAP Easy Access screen. Now, what's there in the script? The script says that we will now do transactions. We are done with, so we have to do all these transactions now and run the reports. We have to enter a customer invoice, run reports, a customer credit memo, run reports, and then do a customer incoming payment and then run reports. We have to do a vendor invoice, run reports, enter a vendor credit memo, run reports, and then do a vendor outgoing payment and run reports. We are going to keep it short, sweet, and simple right now. We are not going to make it complicated. There are many, many more things you can do. We'll discuss all that not even in volume 2 of Business Partners 1. We are going to discuss that in Business Partners Part 2, which will again have 2 volumes, or if required 2 volumes, otherwise 1 volume. Now let's start doing our transactions. So we will go back to the Easy Access screen, expand accounting, expand financial accounting, expand accounts receivable, expand document entry. Instead of expanding master records, we will now expand document entry. And see, the T code is there, FB70 for an invoice, customer invoice. What is F-22, F-27, F-26 we will learn later. For lecture 4 and lecture 5, volume 1 and volume 2, we will only learn FB70, FB75 for a credit memo, and F-28 for an incoming payment. So I'm going to now double click on FB70. It says start of application, enter outgoing invoices, and we are going to now enter an invoice for a customer that we are going to choose. We are going to choose customers for MR88, so I'm going to hit the green tick. I'm going to choose customer 1, so I'm going to double click on that. We have already discussed what is an invoice date and a posting date and a document date, and what's the difference between the 3. I don't need to do that again. So I'm going to choose my invoice date. We have discussed value. I think we have discussed document date, posting date, and value date. So we have 4 types of dates, and we have discussed this before. Invoice date, value date, document date, and posting date. We have discussed these 4 dates in lecture 3 before we started posting for our general ledger. So listen to that lecture again. Invoice date I'm choosing the same, and posting date also I'm choosing the same. I'm putting in an invoice here for $85,000 Aussie dollars. This is for I can say sale of or this is for customer 1, so I can choose anything, general merchandise, whatever. I'll just put that here. Now GL account, I scroll down. Now, as I had mentioned to you before, these are the fields that we can control. Now this is, I'm on a transaction screen right now. What I'm trying to do is create some transaction data. And as I had mentioned earlier, transaction data, transaction fields on a transaction data screen can be controlled using field status variant and posting key variant. So, and these are the fields that I'm talking about. So these are the fields which I can control using field status variant and posting key variant. Now, and these are the T codes that I'm going to run. I'm running the first one right now, which is FB70. So we'll go back to the live system, and we will see that these are the fields which we can control at the transaction data level from field status variant and posting key variant, along with the fields that are there in these tabs: payment, details, tax, notes, and along with the fields that you see here on the top. These are all transaction data fields. We are sitting on a transaction data screen right now. So I'm going to go to payment, and I'm going to select a baseline date or a beeline date here. This is mandatory. You have to select one. You will learn more about this when we do payment terms. We're just going to do payment terms. For payment terms, you have a baseline date. So the system knows from where to calculate the payment terms. This is mandatory in EHP6. You have to enter the baseline date irrespective of whether you have payment terms attached to your customer master or not. Like right now for customer 1, we do not have payment terms attached to the customer master. You can, if you want, attach payment terms here in the transaction screen also, if you have not done it in the customer master. But we have not even defined a payment term right now for customers. But the baseline date is still mandatory. It was not before, it is now for EHP6. And again, now we have a baseline date, invoice date, document date, posting date, and value date. So we have 5 different types of dates now. And again, I would tell you, refer back to lecture 3, which was for general ledger. Right before I was posting into the general ledger, I discussed all these types of dates. We are going to choose the same date, 7th of December here. I'm not going to choose any. I'm not going to choose a different date here. I'm going to come back to basic data. Now it shows me now the baseline date. Amount is still 85,000. Invoice and the posting date and the baseline date are all same. I'm going to scroll down below and choose a GL account. Now I'm going to choose my GL accounts from my chart of accounts called MR88. My operating chart of account is also called MR88. So I'm going to hit on the green tick, and I'm going to choose sales account here because I'm making a sales to one of my customers for general merchandise for $85,000. I'm going to double click on this. Now see, the credit field is automatically chosen before. I don't need to choose that because this is an invoice entry screen for a customer. They know the sales account will be credited. So, and I don't even need to put the amount here. I just put star because I've already put the amount here in the header. As I told you, there are 2 components of this screen. The top component that you see here is called the header, and the bottom part is called the value field where you enter all the values. So I have put a star here. I'm going to hit enter on the keyboard. It automatically picks up the amount 85,000. Text is a mandatory field. I guess we made text a mandatory field from our field status variant, if I'm not mistaken. So I'm just going to put here a general merchandise, and I'm going to hit enter, and I'm all good because there's a green tick here, and also this is green, so I know that my entry is correct. Now I'm going to go on top to document, and I'm going to choose the option simulate. So once I do that, it shows me how this document is going to post into my ledger. It will not post it though. My customer 1 would be debited for $85,000 by using posting key 01, PK01. See, posting key. My sales account would be credited for $85,000 using posting key 50. More or less you can see everything here. I'm in period 6 of fiscal 2013. Negative in SAP means a credit. I'm now going to hit this, and it will post this transaction to the general ledger. So the same button which we used to save before we'll now use for posting. We will not talk about park or complete right now. We'll do that later. Right now I'll only show you how to post. So we will click on this one and it's going to post this document to the general ledger. We are going to run quite a few reports and check the general ledger, the customer line item report, the customer balances report, and the last document posted report and everything. But before we do that, for the $85,000 invoice which I just put in for my customer, it has already been posted. I will put in a credit memo for $5,000. Same date. So I'm going to hit the yellow back arrow. Data will be lost. Do you want to exit? Yes. And I'm going to now put a credit memo, FB75. So I'm going to double click on this one. I'm going to choose my customer, same customer, customer 1. Document date. So instead of invoice date, now I have a document date. I'm going to choose 7th of December. I once again repeat 5 types of dates: invoice date, document date, posting date, value date, and baseline date. So you just refer back to lecture 3. Baseline date has probably not been discussed in lecture 3. We just mentioned what it means. The system calculates payment terms from baseline date. Now amount, I'm going to put a $5,000 memo. This is you could say overcharge, which we overcharged the customer, so I'm going to rectify that. I'm going to go to payment and mention a baseline date, same 7th of December. I'm going to come back to basic data. It says due immediately because there is no payment term. 7th of December is the baseline date. I'm going to scroll down. I'm going to choose my GL account. Now in my GL account here from the bubble, I will again hit the green tick, and I will not choose my sales account now. I will choose sales return account. So while sales account was account starting with 2, sales return is an account starting with 1. It's an expense account, sales return, while sales was an income account. So I'm going to choose sales return. I'm going to double click on this one and see, therefore it's a debit, and I didn't choose that debit, it was already there. And I'm going to put a star here for document and hit enter. It's going to ask me to put a text here because I'm sure we made text a mandatory entry when we were doing field status variant, and I did tell you that the transaction fields we control and all these fields that you see here, payment details, tax notes, from field status variants and posting key variant. So I'm going to put a text here. I will say overcharge. I'm going to go to document and simulate this. I'm sorry. I'll first hit enter and it'll put up green tick here. Line item is checked, all correct, all entries are correct. I'm now going to go to document and simulate, and it's going to simulate the document for me. Posting key 11 used to credit the customer, and posting key 40 used to debit the sales return account by $5,000. Period 6 for fiscal 2013. I'm going to post this. Document 16 was posted. Why it says 16? Because credit memo document type has a number range 16 attached to it. That's why. Now we are going to learn how to run the different types of reports. We'll first learn to run 2 basic reports, customer line item and ledger line item. But even before we do that, let's put in a vendor invoice and a vendor credit memo. So let's go back using the green back arrow. Do you want to exit? Yes. And close all this and open accounts payable. and then open document entry in accounts payable and choose FB60 for a vendor invoice and FB65 for a vendor credit memo. So FB60 for a vendor invoice, I'm going to double click on this one. I'm going to choose my vendor. I'm going to hit on the green tick here and choose vendor 1. Invoice date is, again, all dates I'm keeping same. No confusion here, 45,000. Text is inventory purchase. Payment baseline date is still the same. I'm going to come back to basic data. It's due immediately because there are no payment terms attached right now to vendor master. GL account will be now, I'm going to hit on the green tick, will be now the purchase account. In this case, in a vendor credit memo case, a vendor memo, it would be a purchase return account, but right now purchase account. So I'm going to double click on that. I'm going to put a star here because I've already put the amount on top. I'm going to hit enter on my keyboard and it tells me to enter a text which I say inventory purchase, and I'm going to hit enter again on my keyboard. There's a green tick here which says line item has been checked, all entries are correct. I go to document on top and I choose the option simulate, and it tells me that my vendor account would be credited by posting key 31 and my purchase account would be debited by posting key 40, both by an amount of 45,000. I'm going to hit the save icon here, which is right now not save but post. Vendor invoices have number range 19 attached to them, which we have already defined for fiscal year 2013 when we were doing document types and document number ranges. Therefore, the document 19 all zeros was posted in company code MR88. We are now going to hit the yellow exit button. It says data will be lost. Do you want to exit editing? We are not putting in another invoice, so we will say yes. And we will now double click on FB65 and try and put a credit memo for a vendor. I'm going to double click on this one. I'm going to choose the same vendor. I'm going to hit the green tick, vendor 1. Date is going to remain the same, 7th of December. Amount would be again $6,000. Let's say text would be overpayment. 7th of December. For the baseline date in the payment tab, I'll come back to basic data. I'm going to scroll down and I'm now going to choose in GL account for MR88. I'll hit the green tick, purchase return and not purchase account. So purchase return is an income account and purchase is an expense account. So I'm going to double click on this one and by default it's a credit. I'm going to put a star here, hit enter. It's going to ask me to put a text. I will say overpayment and I'm going to hit the save icon. I'm going to hit enter again on my keyboard and the green check is going to come. It says line item has been checked. I'm going to go to document and simulate this one and it will tell me that with posting key 21 it will debit the vendor with $6,000. With posting key 50 it will credit the purchase return account for $6,000. For period 6 fiscal 2013, I'm going to click on the post icon here on the top and document 17 was posted. So vendor memo is with number range 17. I'm going to hit the yellow exit button again. Data will be lost. Do you want to exit? Yes. And I'm going to close everything and we are now going to learn how to run our reports. We will learn now several different types of reports and see what those reports tell us. So and you will see the list here for all the commands: FBL5N, FBL3N, FD10N and FB03. We'll continue running all these reports. FBL1, 310 for vendors and FBL5, 310 for customers. Now, we will now do a little bit of reporting. We will learn how to run the standard reports, and we will see and check the transactions that we just put into the system. And we'll be going back to the live system again, and the first report that we would be running would be the customer line item report, or FBL5N. Now if you go into accounting and you go into financial accounting and you go into accounts receivable and you go into account, then this is where you get to see FBL5N. So I'm just going to put it here